Good morning. Welcome to OptionsTender. It is Monday, December 2nd, 2024. Welcome, traders. We're going to take a look at multiple names and multiple indices on the weekly time frame. This is going to be a little bit different. And then we're going to look at Nvidia on the weekly. And then we're going to take a look at, I think, the dollar bonds. We're going to go through those pretty quick. The VIX, just so we can get a big picture of what I've been kind of talking about in this and sort of compilation, and see where we're going with this. This does kind of tie into the 2018 ending diagonal or wedge pattern that I was presenting over the weekend. And then I want to make a slight tutorial out of this. It's not going to be as long as you think, but if you want to zoom through this on 1.25 or 1.5 speed, then you'll get through a lot of information. And so what I want to do at the end of this is show the formation on SPY of what this ending move is, and I believe it's an ending diagonal. And I'll show you how to look at that. Okay, so and I'll give a basic premise of how I use Elliot Wave. I'm not going to go through all the rules. There's there's a lot of it, and I'm talking the basic Elliot Wave. I'm not talking about the new age where there's WXYs and things like that. I just use the basic 1, 2, 3, 4, 5 impulse and ABC correction. All right, so we're doing this intraday about 11:47 a.m. Eastern Standard Time. So if you're interested in getting these videos intraday, consider becoming a YouTube member for 99 cents. All right, and we do individual stocks as well for $4.99. So let's dive into it. We have SPX, and the reason why I use SPX, it's the cash for the market, and I think you get much more clean charts, the real deal, and there's no skew from SPY with the dividends, and then with ES, the futures, no contract rolls. Okay, so this is just pure cash. So what I'm looking at right now is the major top here from 2029 is exactly right here, and I want to show how accurate we're at right now. So we're going to zoom ahead to 2000 and look at that, right on top of the wick here, right at it. And then we're going to zoom ahead to now, and here we're looking at right now. Tagged it last week, and do we tag it again? Possibly. I think we're just a couple points right under it there. So overall, and we're not doing this full analysis, but we had this triangle type formation, and now from the bottom of 2022, the correction there, to the top here, so this entire move, the retracement of the 62% retracement just so happens to be right at the, we call it a bow and arrow support resistance, where a volume node is from all this trading here. So that's a good target, I think. Very conservative target for a recession, but I don't think it's done after that. But this is where we'll look for in the first type move. Okay, so. And from there, that's technically a 1-2 setup. So we should get a nice bounce there. If not, hey, new highs from that point if you're a bull. Okay, so I'm in bearish mode with this recession. I think that this will be our first target, maybe a bounce, maybe a zigzag down to lower targets as far as down as the wedge bottom here. All right, that's a and maybe not that, there's a huge volume node here too. So over 50% of the market, overall market, SPY, SPX, ES, that would be a over 50% retracement. And that's not unusual, you guys. So that's what happened in 2000. That's what happened in 2008, et cetera, et cetera. 2029, that was like an 80% correction. I mean, my God, that's huge. So, all right, let's, that's all I want to show there. Let's go through, I'll just go down to the dollar. Dollar's starting to rise again. So we had some trading action here, and this downtrend back testing, staying above the 8 EMA, and I think the dollar moves to the next target about 109. That is a safety trade, in my opinion, and that will, I do think, will make new highs, and as the market gets crushed, really, in a sense. So the first glance at TNX, which is a 10-year yield, looks like it's a possible flag pattern, and we go higher. I'm not in that camp. We can keep an eye out for that, but I'm not in that camp. I'm more of if you do the inverse of that and you take the 10-year Treasury, I think we're setting up to go higher here. So we're starting to move, and as rates move down, I had somebody mention in the comments of YouTube that rates are good for the economy. Well, yeah, I mean, that's why the rates go down. It's the bond market saying, hey, we're getting into a recession. Bonds go up, rates go down, because the bond market knows we're going to a recession and we need to stimulate the market. But by then, we're already losing jobs. Everything's going down. It appears that the Fed's in control, but that's not true. The Fed is the tail that wags the dog, in most people's opinion. But the Fed just keeps up with what the bond market does. So they have to move their short-term rates. So that's why it always seems like they're behind the curve. And then they get blamed for it. And I'm not in that camp. So once the bond market starts moving, the Fed will have to cut rates. It's going to have to follow, and they'll do big chunks at a time at some point. So look out for that. Rates go down. That signals a recession. Yes, it will ultimately stimulate the market over time. After 1 year, 2 years, 18 months is typical for a recession. So 2026, maybe. VIX. Remember, this is a weekly time frame. We had a bullish falling wedge, broke out from there, and now we're back testing. So I know this is, it wicks all over the place. It's very hard to chart the VIX. I could put the line there to tag these, right? And then we spike above, and now we're back testing. So just a big zone. I like to keep the median, the body here, the bodies. And so now we're just back testing it, and I do presume, I know there's cycles here. That's from Ask Slim. We made a new low here. Do we have a divergence on that low? No, but we're oversold. We do have a little divergence on the MACD, and so we're in an uptrend on the MACD, and I do suspect that we'll get new highs here, possibly new highs over here as well, and likely new highs above here if this setup works out properly. Okay, Nvidia. Nvidia is a big one to keep an eye out. We have this beautiful channel in the blue here. We have the touches from the low here in 2022, that correction, and just a massive move by Nvidia ever since, and it's leading the market. So now it's going to start leading the market to the downside. We're just now getting our initial moves. It seems like Nvidia had quite a big move to the downside. It's nothing. This thing can move. At minimum, I think 75 here would be a good spot. And then I'll start actually buying Nvidia in my growth account at that point. But I think potentially it could go lower, 50. That would, Apple did that at some point, faded down to about 50 after being in the hundreds at, you have all the different stock splits and things like that. So I know it skews. It seems like 50 is very low, but it's really not at this point. So we have the channel here, and we're right at the channel. Had a move off of it, a little bit of a wick on the weekly time frame. If we lose this channel, then we're going to start seeing a correction. We're just not there yet, but I think it's coming really soon. So we break down from this channel. I think we start correcting this move here. So if you want to count this as 1, 2, 3, 4, and wave 5, then it's just likely that we retrace a certain extent of this entire structure. And we'll talk about that 5-wave move here. I think that's actually a good time to talk about it. When you have an impulse wave, we're going to show it on SPY in more depth, but this is just a standard impulse wave. So you look for 5 waves in here. 1, retracement of 2, 3, which there's a 5-wave move in here for the 3, 4, looks like a triangle, and then 5 for the last move there. So, and we're going to look at SPY as being an ending diagonal in this move. So it's still a 5-wave move. It's just going to be made up a little differently. So our retracement back to the 62% or even just 50% is 82 to 65 area, and 786 would not be unheard of in such a volatile stock. So we can go all the way down to 4150 in this trading zone here. You see a good support in this consolidation zone. So also the 200-week moving average. All right, getting into SPY, we'll talk about this. Let's do SPY last, so we can just a quick look at the Qs. This is from the 2000 top, from the tech bubble. So we're exceeding that. We're trying to stay above it. If we get back below it, then we'll be breaking this trend line and fake breaking back above there. But then we have this divergence trend here from 2022, the 2021 top. And then that coincides with the near-term top that we had here in July. A touch here again. And if you zoom in, maybe since we did make a brand new high here, maybe we go up to this trend line one more time. But we are showing divergence even up to just now, where we eked out a new high here, right there. So not showing any strength in that, just a downtrend here, and eventually that's going to break. On the weekly time frame, that's pretty huge, and at minimum, the near term on this weekly time frame would be this ultimate trend line here from the bottom of 2008 going into 2009, and that's where the 200-week moving average is. So just a simple back test of 402 is, maybe we just get a bounce there, but that's just that would be the beginning, and I think we break this trend and correct more than that. And again, we have this Corona crash and environment here where a lot of volume is, so possibly all the way back to 200. I know that's, again, huge. In the 2000, the market corrected, I want to say 75% or so. It could have been 80% on the Qs. Huge move. And here on IWM, we talked about this. We're at resistance and breaking down. Made a new high here, but I think this one is a more simple move where we have a 5-wave pattern, but this initial pattern can just be the start of a more complex pattern. But I think this is just a simple ABC correction here at this point. And with that said, with an ABC, you have a 3-wave move down for A, a 3-wave move up for B, and then a 5-wave move down for C. So that's how corrections are set up. Corrections are made up of 3 waves, and always wave C has a 5-wave move in it. And you can see this on a lower degree right here. You can see that we have an A, expanded B, and then a 1, 2, 3, 4, and 5 for an ending diagonal here. And that's why it looks so clean with the wedge. It's very typical for an ending diagonal to form a wedge. So that's what we're going to look at in SPY as well. DIA, kind of forming a wedge here. Can we get up there? Maybe, but I doubt it. We have this channel that we're starting to form here, and we're reversing off of that channel as well. And then we have some more trend lines on lower time frames. And SMH. So same thing with Nvidia. We just want to be super careful. Once this breaks the trend, we're bouncing off of it right here. But once it breaks, and go back to the last video, because SMH is bouncing off of the 200-day moving average. We break down from that 200-day moving average and see ya, and the market's going to take off with it as well. It's going to get real messy. So this is a wedge that's forming. Had divergence, negative divergence up here. And we're just getting a reaction off of the trend line, which is right at the 50-week moving average as well. But after this bounce, I do believe, I'm not sure that we're even going to make a new high here at 262. I think we're just going to create some sort of bounce. We're going to fall out of this wedge, break this trend line, and we start to descent from there. Okay, so SPY. SPY, what I want to show here is the wave 3 and a 4 from 2021 into 2022. And we're having our ending diagonal for the wave 5 of 5 here. Okay? So it's forming that beautiful wedge that we talk about. And so right now, let me go here. And so what we're looking for with just the basic Elliott wave is a structure. And in this one, it's an ending diagonal. So we'll get to that. But a typical impulse wave with 5 waves is our initial wave 1. You get usually a steep wave 2, but that can be a flat pattern as well. But typically it's in wave 1, you get an impulse, a 5-wave move in this one, and then you get a nice sharp 3-wave move for a correction into 2, and then you get your larger wave 3, and then more of a time-consuming, less sharp wave 4, and finally a wave 5 with and the only thing we're going to talk about with rules is that wave 3 can't be the shortest. So if wave 1 is really long and wave 3 is not as long as 1, then wave 5 is going to be shorter than 3. So then you can kind of work things out like, oh, okay, well, we have a limit on wave 5. But if 3 is the longest, which is typical and the most impulsive, then wave 5 can be anything. Wave 5 can end up, which happens in commodities a lot, or even Bitcoin, for example. Wave 5 can be longer than 3 because 1 is the shortest at that point. And so this can be a blow off top for a very large wave. But in the impulse, the most important thing to think about this, besides that wave 3 rule, is that you have 1, 2, 3, 4, 5 waves. And so with that said, label these 3, 4, and there's a rule of alternation where if wave 2 is a sharp move to the downside, usually wave 4 is something else, not a zigzag down. And you can look up all those terms, but it could be a triangle or a flat pattern, something that takes time to develop. And then within, for example, wave 1 into 2, you always have a 3-wave move, with the exception of a triangle, which in wave 2 you don't get triangles. So now, just with a zigzag in itself, and that's just the most popular way to draw your correction, a 3-wave move. Well, you have 5 waves into an A, and another wave B can be a 3-wave, or it can even be a triangle. And then wave C, another 5-wave impulse move. So this, in this case, it'd be 5, 3, 5. And so that would be within this pattern here. Okay. So that's, I try to keep it simple and say, hey, for example, look at this over here. This looks like a 3-wave move into an A, 3-wave move up for a B, and then an impulse wave, 1, 2, 3, 4, and 5 for a C. So it's very corrective here. And then the major trend resumes. And so now we'll talk about this ending diagonal that we're in right now. So of course people can look at it in different ways and count it in different ways. That's why it's so speculative. But with the match between this wedge and what we're counting, it just makes sense to put it together. So we're getting a 3-wave move for a 1. And remember, this is a 5-wave move, but this is an ending diagonal, so all of the waves are made up of 3 waves. ABC for 1, ABC for a nice sharp 2, ABC for a 3, and you say, well, this is a sharp move as well. Well, I actually would argue that this is the sharp zigzag and this is the flat pattern. Where this took more time, that was really, really fast with the yen trade, the carry trade. ABC for 3, ABC for 4, and now the big question here is, what do you call this? I mean, some people can count it as 5 waves, but I could have counted this as 5 waves too. And that's why it's very difficult. So maybe this is the A. I think this might make the most sense. And this is the B. And now we have wave 1, 2. Wave 3 was the Trump bump. Corrective 4. And just eking out a 5. So wave 3 is shorter than wave 1. So wave 5 has to be shorter than wave 3 by rules. So this is ending soon. And we can measure that at another time. You can do it yourself. Just measure that between this one and that wave 5 cannot exceed the length of wave 3. Okay. So that's our ending diagonal. And then one of the things that Elliot Wave theory talks about is when you get into that wave 3 into 5, you have to have a divergence in, for example, the RSI. And we have that here. So from 3 to 5, you have your divergence. And we have it on the MACD as well. So everything fits. All the rules, all the check marks are done. Now it's just a matter of when the market wants to let go. And clearly when the Qs let go and we stop rotating, then we all go in tandem. Okay, so I think that could be as soon as tomorrow. And yeah, I think that's all we want to talk about today. Took up about 24 minutes. So thanks for joining us here at OptionsTender. We'll see you in the next video. Don't forget to subscribe and like this video.